Welcome to EnergyRogue.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on EnergyRogue.com.
Hey, welcome to 2025.
25 again. Hey, listen, guys, so sit back, relax, because obviously nothing's happening in the energy business. It's all quiet. It's the same price it always is. Nothing ever changes. It's as boring as trading electric chihuahuas. So,
Electric chihuahuas.
yes, that's another story for another day. That's at least a 3-beer story.
A 3-beer story. Okay.
But it's not like this compulsive need to be liked, like my need to be praised.
Exactly. You understand?
Yeah.
I don't know how you got those clips of me when I was working at Lynn. I don't.
Those are always fun. And listen, hey, welcome to 2025. We are going to talk today about 2025 and how this might be the year of the bull. We're going to look at the reasons why crude oil would go up, why natural gas would go up, as well as what could hold it back. So that's what we're going to do. We're going to target about 30 minutes. If you have any questions along the way, hit us up in the comments. We do see them, and we will try to get back to them live if they come across live. So
my goal today is to be friendly and helpful to everyone.
That's my goal today.
And I just want to remind you,
the mind is the only weapon that doesn't need a holster.
There you go.
All right, so here's what we're going to do. We're going to talk a little bit about the end of the year in 2024 and the beginning of the year in 2025 and what has changed. So a couple of things have changed. If we go to, let's see, should we start with, let's start with crude oil. So
Right.
when we look at crude oil, the year of 2025 has, I want you to look at this. These are $2 deltas, okay? These are roughly $2 or less. So less than $2, right? And then we have this one, which is close to a $5 delta. Now, why would that be, Bill?
Well, we've got a lot of different geopolitical things going on right now that's causing a lot of that bump. And the fact that we're looking at 25 a year average, $5 above going out there, that's significant. I mean, that's being probably driven by mostly in the prop quarter, would be my guess.
Yeah, well, let's actually take a look. So when we look at this, and you're right, if you look at this curve, it is a very shallow from high to low here. We go in 2026 from 69.76, call it 70, to 67. So about a $3 delta. But from February, we have 77.50 down to $70. So you have a $7 delta here,
Right.
from here to here, whereas you only have a 3 delta from here. So that means that there's a lot of front-loaded risk. A lot of this risk we're going to get into what are the bullish things that could happen, but we have 2 wars that are going on. We have the potential for sanctions that are coming in because of a new administration. And there are still questions around supply, but there's also questions on demand. And if we look at the long-term WTI, we are kind of in this range right here. And you can see We had periods above that range and periods below that range. So this is kind of what I consider this the average zone. Would you agree with that? Kind of this.
But I think the reasons are. I think there's some stinking thinking out there, and I call it stinking thinking. It's just different thinking on why we think demand is going to go down, and I think we can probably prove some other things. I'm working on this theory, by the way, called the
Theory?
Jevons effect. Yeah, Jevons effect or the Jevons paradox, and the fact that the more efficient we get, the more we use.
Hmm. Well, you probably could look at the percentage of population that is distributed across GDP and
Right.
across economic, and there is a large swath that if you just put a little bit of that into a more mature, you'll see the energy consumption just explode in value. So,
Right. You start looking at that on a per capita. I get very bullish.
yep. So let's dive into crude oil and what could happen there. So, what is the bull thesis? China's monetary policy, if they continue to throw money at problems, which is something the United States did for a long, long time, which is basically devaluing their own currency, but it makes other things seem more expensive than they used to be. So
Right.
this is like printing money. This is printing money. This is one of the thesis points, and you could see it in December. There was a monetary policy and easing that China did, and that did lift crude prices. Um, Geopolitical tensions. We have Russia and Ukraine. We have Israel and Hamas. Both of those are in critical locations, and there's been an increase of the geopolitical tension that has happened around policy, and we'll get to that in just a second. Um, what's another bull thesis could be non-OPEC plus supply disappoints. So in 2022, the US added 1 million barrels a day. In 2023, you had Venezuela, you had Guyana, you had Iran, you had a couple 100,000 out of the US, really. That's all that really came out of the US. Now, one of the things that we track, and part of the reasons that we expected the US to have kind of a muted effect, is because of this chart right here, which basically is showing that the US is still adding production, but at a much, much lower rate. So each month we're adding production, but bear in mind that's 50,000 barrels a day added to a 13.5 million barrel a day market. There's not going to be a lot there. So we expect with the current price dynamic, unless crude oil goes up another $10, I don't expect much supply growth here in the US. Maybe a couple 100,000 again. If I'm looking forward into that, Guyana will add, Venezuela will add, Iran, Russia, we're going to have to see because we'll talk about that in a second. The other bull thesis is that we have an economic recovery. Because, Bill, weren't you saying that in 2024 we were largely in a recession?
Yes. Uh, one of the things that I've just recently just saw a video on this week is there is a new optimism in the U.S. Good, bad, or ugly, whether you agree with the administration, don't agree with the administration, the optimism drives economic recovery.
Yep. Yep.
And so that good, bad, or ugly, it really doesn't matter. It really matters what people are out there doing. And so I really think that we're going to see an economic recovery. Now, I'm always skeptical of when we think that the government's here to help us. You know, I think Reagan put it there as the seven most dangerous world is, hi, I'm from the government. I'm here to help.
If they make you an offer, whatever it is, just take it.
Exactly. Just take it. But I do believe we're going to see some economic recovery, and I think it has to do with the attitude of the country, not the um, position that's been filled by any particular person.
Hmm.
Other than the fact that the people coming in have a positive attitude. You know, positivity begets positivity, and so I think that's where I'm seeing that we're going to see some economic recovery. But to be honest with you, we need it. We're struggling, and inflation is real and it's cumulative, and that's what most people don't grasp.
Yeah. And we do have our friend Joe. Hey, Joe. We'll talk to you in just a bit. Tier 1 shale locations are running out 100% right here. There are new techniques that are adding some extra extra productivity, but we're not having the productivity leaps that we once were. And so, Joe, you're right on target. The tier 1 shale is going out, and this means different things for gas and crude. We're not going to dive into that, but it actually is going to be something that we're going to be, the balance between gas and crude is going to change because of that tier 1 shale. So you're
Well,
completely
I
right
think
on target.
also too there we it's a cycle that I notice. About every 15 to 17 years, we see a technology advancement in the not the production, but on the drilling side. And we're
Mm,
still about
mhm.
5 years out from that. And so I think that the shale is just the most recent technology development. I think there's some other stuff coming along that we're not even beginning to. We are just beginning in this industry to look at AI and helping us find oil instead of produce and the efficiency hasn't moved to the drilling side yet. So that's going to be really interesting. I think that the oil is still there. It has not moved. It's still there.
Yeah.
It's
Yeah.
it's a problem about getting it out. And the problem about getting it out is getting it out at a price that people can afford. And that's always going to be the issue.
Well, and that's part of the reason with the current price dynamic, I don't see non-OPEC plus, especially from the United States, really changing much. It is going to be driven by other countries unless we go to a different stratosphere on price. Because you also have the Permian, which has changed hands from a lot of independents that were single basin operators to Exxon, to Chevron, to the big boys, and these will deploy capital in a much slower, more logical. And now Permian has to compete against international projects. So I expect more slowdowns in the US supply growth.
Well,
And
and Brian, you know what we and you both have been talking about. The rigs have been flat for the
yeah,
last 6 months.
well, I
You
mean,
know,
this is part of the reason that we look at the active rigs. And if you just look at this curve right here, this is on the weekly basis. I mean, you can see why we grew 1 million barrels a day in 2023. And what has happened since that time? We've dropped.
right? And decline has not gone away.
And that's the other aspect that we try and take a look at is to gain 50,000 barrels a day. To gain that 50,000 barrels a day, look at this. Where is it? Crude oil from new wells. New wells had to produce over 660,000 barrels a day of new production to get 50,000. That's overcoming decline to get there. That's new production being brought online, which means if you only bring on 500,000 barrels of oil a day, we decline by 500,000 barrels a day.
So basically, to put that in math, what you got to do is you got to produce 7 barrels to gain 1.
Yeah. Yeah. So, these are some of the things: economic recovery, which a lot of analysts are projecting, sanctions on Iran and Russia, which have been there. And this is where, when we look at the absolute data on sanctions on the supply side, really what we look at is it's a muted effect. But people are projecting with a Trump presidency, maybe there's going to be more enforcement. But I want to show you something. All of this growth right here, and let me take off this and this. So all the growth from this 2 million barrels a day mark to 3.5, this is all under sanctions and during sanction period. So they were able to grow their production, and that had to do with how they were delivering this. And by the way, I'm Brian. This is my business partner, Bill. We run a company called Energy Rogue, and if you go to energyrogue.com, you too can sign up for Rogue Radar, which is right in here, and you will have access to your Monday game plan. Every Monday, you are going to get a PDF report that is going to tell you everything that is coming down the way with price levels and everything, as well as a video which walks you through things that are happening in the week. Plus, later in the week, when some of the data is released, you get Rogue Radar, which is going to have our convenient red light, green light report. And traders use this from around the globe, plus a video that outlines what is actually happening, why things are bullish and bearish. And then for those that want to take the next step, Rogue Edge is going to give you access to our dashboard. And traders pay thousands of dollars a month for dashboards like this. We're giving this to you inside of Rogue Edge for $179 a month, and it gives you all this interactive capability. Plus, you can go back in time. You can actually assess things. And this, for example, is natural gas. And part of the reason that we look at the market a little bit differently than other analysts, we aren't guessing. We're looking at data for our decisions. Plus, on natural gas, you get access to our gas weighted total degree days, which is going to forecast what the future holds, as well as the financial, which is going to tell you where the market currently is, where it might be going. And we just released our beta test for our AI Copilot. This thing is really kind of cool. You go natural gas, you say you like fundamentals, and you're looking at exports and storage and MACD. You hit submit, and this AI Copilot is going to give you a summary of what is happening in the market right now, every single week. And it is going to give you price levels. It's going to tell you what the technical views are, what the moving averages are, the RSI, as well as a step-by-step trading plan. Not financial advisors. This is not trading advice. This is an AI taking that and delivering ideas that you could utilize if you want to in your trading and hedging plan. So, did I miss anything on that, Bill?
Is that price again?
So on energyrogue.com, right here, Rogue Radar is $89 a month. Rogue Edge is $179 a month. Just click those buttons, join. We're excited to have.
Whoa! Wait a minute!
Man, Brian, what is going on there, bud? You're like giving this stuff away.
Yeah, a lot of our traders think we are giving away a little bit too much, but we want to make sure that this is a value and give you everything that you might need so that you can develop your own strategy, your own execution, your own plan. And in addition to that, with Rogue Edge, you get access to our Discord group where we talk about the market every single day. This is all just today's activity. So we talk about that market that is inside of Rogue Edge. which again is on the homepage, $179 a month. Or if you want to just start with the PDF reports, it's $89 a month, and this will give you access to all of that. So, any more comments before I move on?
No, I think, folks, what we're really trying to say is you don't have to be confused by this market. You just need information. And we take data, turn it into information, and help you develop a strategy. That's what we do. Then
Right.
from that strategy, we'll help you with your action plan. That's what we do. Been doing it for a long time. We like helping people. And, you know, if you don't believe
This was a
it,
conspiracy that had to get all those people to lie.
Which, speaking of, on our homepage, you can actually scroll down and see what actual members think. And so that is actually, those are real people, those are real reviews. So we want to bring this to save you 20, 30 hours a week on research, put it all in one place so that you can get to strategy building, because that
right, we want you to be a success. We're here to help.
Yep. So, bull thesis: China's monetary policy, geopolitical tensions, non-OPEC plus supply disappoints, which I actually think that's going to be true. Economic recovery, we'll have to see on that one. Sanctions for Iran and Russia, what is that going to look like under a Trump presidency? So, what are the bull thesis details? China's monetary policy, geopolitics, supply disappoints, economic recovery, and sanctions. What could happen that destroys a crude oil bull thesis? Oversupply from OPEC plus, if they actually bring on their curtailed production, which would add probably an immediate 1.5 million barrels a day up to 3. So that is kind of what we see. You'll see different numbers floating around. I think 2 to 2.5 is about what we project truly curtailed production right now. If non-OPEC surprises, if there's a lot coming out of Venezuela, Guyana, we are going to see that based upon the trends that we see, based upon the trends that we're seeing on Venezuela. Let's actually take a look. It's right down here. Where is Venezuela? There it is. Based
South
on
America.
this, yes, yes, it is. So, thank you for that. Okay, so
Venezuela problem. The Venezuela problem is not the amount of crude oil they have; it's their ability to get it out with a to be able to get it to the coast to sell.
So there's a lot of discussion about Venezuela, but you can kind of take a look at it this way. About 400,000 barrels a day. We're still shy of 1 million barrels a day, and that's from 2021 to 2024. This is actually what we've been talking about for some time. It's a longer build out, and you have policies to deal with as well as companies to deal with. This is probably a 2-year arc at best. So,
and I mean they have probably the largest reserves in the world.
yep. So oversupply from OPEC plus and non-OPEC. Non-OPEC, I'd see US and Canada. Canada's been sneaking up. So they have a lot of things going on. And with the recent conflict or drama that Trump inserted between Canada and the US, we'll have to see how that plays out. The global economy.
You realize they changed leaders too, just in the last month.
Yeah. Yep. So oversupply is one bearish thought. Global economy struggles, that's another one. If we just meander along, I think there's a lot of problems that could happen. Clean energy transition accelerates. I don't see this as a bear thesis in 2025. It could happen, but I just don't see it. So
No, I don't. There's so much capital that have to be deployed to do that. I don't think it's available for that, especially
Well,
if any of the government subsidies goes away.
we'll do another
this
episode
fall.
on EVs, but EVs are pretty much close to their U.S. capacity constraints right now. So, so bear thesis: oversupply, increased production, leading to market saturation, economic downturn, impacting oil demand. This one has some real root because we still have not seen strong numbers coming out of China. India continues to show strong numbers, but they're not quite to the scale that China is. That could be a different story in 2025, right, Bill?
Yeah, I think so. I think India could actually accelerate just because of where they are in how their economy is growing.
Right.
There's a curve that goes, and I think they're in the middle of the curve, which is where per capita they use the most energy.
Yep. Clean energy, we already covered that one. So natural gas. Let's go to natural gas. And please feel free to ask your questions. And Joe, thanks again for chiming in because I think you're right here. Tier 1 shale is drying up. So let's look at natural gas. What are the bull thesis? LNG export growth in the United States, Canada, and Mexico. This is set to add 5 to 7 BCF a day of exports out of North America.
And when you talk about that, that is not really a thesis. We know those plants are being built.
Yeah. And let's take a look at it this way. Let's look at demand right here. And LNG has gone. And again, if you're in Rogue Edge, you can just do exactly this. So right now, North America or the U.S. is exporting 14, a little greater than 14, close to 15 million a day. We are going to add 5 to this, so we're gonna grow by 33% in 2025. So that
Now,
is massive.
are you counting Kitimat in that?
I'm just talking U.S. That is
Yeah.
5 coming out of the U.S. You add in 2 out of Kitimat and a little bit in Mexico. We are talking about a massive difference in what our supply situation is looking
So
like.
Brian, there's an interesting thesis that part of the demand fall in China for crude oil is the conversion of their long haul trucks to LNG.
Mm-hmm.
And so the diesel demand in China is going down, but it's being replaced by LNG. And on a per BTU
How
basis,
are they transporting? How are they transporting from the coast, or are they regasifying and then liquefying again?
well, you can actually know what you do is you just take it as a liquid to wherever your truck stops are. You just transport it as a liquid. Very similar. We do some of that here in the U.S.
Okay.
Years ago, I was actually
There's
taking
not many
LNG.
of those trucks, though, is there?
Oh, there's a bunch of trucks. China's almost all diesel.
Well, no. The trucks that can keep the LNG that cold.
Well, I mean, obviously you have to build those, but I mean, I think they're built.
Okay.
We have them in here in the U.S. They're basically propane trucks.
Okay.
You know, because remember what we talk about this is in the space of the ratio 600 to 1 as far as space needed to move gas as an LNG. In other words, you can move 600 more times volumetrically gas as LNG than you can as atmospheric.
Okay.
So it doesn't take, like I said, it doesn't take a lot. I mean, man, when I was at Lynn, we were selling that LNG out of Santana and taking it to truck stops, which was a nice thing for us because we were getting Pendle Eastern plus $5 for our gas.
Right. Yeah.
So what I'm saying is that LNG could be coming. China could be increasing their LNG intake.
Yep. Well, so that is one thing.
That's just one little thing. It's not all on one thing.
All right. All right. I am texting
So
because I'm texting with my daughter right now. So
well, you better do that. So
that's kind of important.
yeah,
Not
weather
kind of,
patterns going
that
back
is
to normal.
important.
Weather patterns going back to normal. We haven't seen normal such long. I'm not sure we're ready for it, to be honest with you. I know it's been cold here where I live in the flyover state of Oklahoma, but I've been seeing the cash price of natural gas go above $4. It's been trading daily higher than NYMEX.
Tell you what, I'm gonna hop off camera for just a second, and I'll
Right.
be
I'll continue on here.
yeah, I'll
And
be right back.
production limited by capital discipline. Had an interesting thought process on this, guys, and that the fact that the capital discipline, people say, well, the producers aren't very capital, they're not very disciplined in their capital. But I think sometimes we don't realize who our competition is. And our competition are nation states. And these nation states have different motivations to produce than our producers. Now, I will tell you, there are people when you start talking about the difference in producers, you have independents and you have the majors. Independents are the people who go out and explore. Majors are the one who manufacture. And so you're always going to see a different thing in how they're driven by that way. And so you're going to see production by capital discipline. It's not so much capital discipline. There's just not a lot of capital going into the energy market right now because they're not seeing the return because the prices have been down. As this price goes up, it's going to be good. The other bull thesis is that we'll see power demand surges. So the power is the number one thing that happens in gas as far as driving the price up and driving the demand up. So if you take the average power demand goes up about 3.5-4% every year, and that is strictly just because we have more stuff that needs to be powered. And a lot of people talk about the EVs driving the EVs is going to run it up some. It's not that's not as near as big as till I started talking about some of these guys who are trying to convert these long haul trucks to electric. That power demand is going to go through the roof if we do that. And so this is something that people need to look at. I mean, just if you want to convert 30 trucks, 30 big long haul trucks over to electricity, that electrical demand is going to go up because of that's almost like trying to power a small city. Also, you have the AI phenomenon coming in. You see these guys going on, and this is going to be the Bill Shanahan prediction on the bull thesis here, is that you won't see that the utilities can't build power fast enough for the AI community. So they're going to go private. They're going to build their own power, and that's going to create more demand for natural gas. And so that's what we're seeing. And I think we're going to see some demand that come off that. And so the global ban thrusts natural gas into the global economy. This is going to get really interesting because nat gas is going to be, it's going to be people like to call it the transition fuel. I agree with them. It's a transition fuel. I think sometimes we think the transition is going to happen faster than it really is going to happen. So what I mean to say by that is that the transition of natural gas is going to be a longer term. In other words, it's going to be around longer to transition to whatever the next fuel is. And that next fuel may be local nuclear power plants, these smaller power plants, or it could be larger ones. But just realize that in order to meet some of the demand we're talking about needing almost 1,000 nuclear plants in the next 10, 15 years. And when you start saying it's going to take 10 years to build one, there's an issue there. So natural gas, I think, is going to be around a long time. So we're talking about LNG growth. the export growth, that's going to be, and realize that a BCF of gas a day is a significant hit on the market. I mean, we're producing about 101, 104 BCF, but so when you start talking about taking 5 BCF and adding to it, that's something that our market struggles with being able to do that. So Brian, we got through that slide on the bulls. Let's just look at the bear thesis.
Okay. Yeah. And sorry about that, but everything is good there. But I do want to just piggyback off what you were saying there, which is if you look at our supply growth, it took 2023, 2022, 2023 was a massive growth on US supply, and massive took us from 95 to 105. Okay. But look at how long that took. That took like 18 months. And that was during a period when natural gas was between $5 and $10.
So let's also look at that. That's also Permian associated gas,
Yes.
and that's also when rigs were at almost 800 rigs,
Yes. So
and now
now
we're below 600 rigs.
if you look at the rig level that has stayed static, we are essentially in this box where most of the year we were down. We did finish up on the Q1, but I'm expecting this to actually dip back down again. So
Yeah.
the question is, in that dip, are we going to increase back up? But so there's the bull thesis, LNG export growth. Weather patterns are shifting to normal. Like, take a look at
Right.
this. They
Wait,
are.
folks, we have WX Rogue, which is our weather channel. So you guys need to be looking at that. We cover degree days and do it on population weighted degree days, and that helps you begin to understand what's coming.
Yeah. And so the weather patterns are looking like they're getting back to normal. And for those that level up to Rogue Edge, you actually get access to our weather expert, our weather guru, Brendan, who posts things like this every single day to where we are looking at weather, and you can get as deep as you want to get on the weather sites. But he's been projecting what our weather patterns were going to look like going into winter and what it looks like for the remainder of winter. And I'm not going to steal his punch, but the end of winter is going to be very, very interesting. And production limited by capital discipline, as you said, Bill, 100% on the Permian. Power demand keeps surging forward. Global demand thrusts natural gas into a global economy. For instance, when we look at the basis points for the United States, you can see that we are sitting at 393. But look at this. There's about a $10 delta between Europe and between JKM. So that $10, that's not all transport. So we are expecting the global demand to pull up prices on natural gas. Now, what could happen on the bear thesis, Bill?
Oh, you know, let's just put it this way: if you get too much gas, especially local, you'll get an oversupply, and a lot of it has been on the NGL side. But I think the biggest thing that concerns me is any interruption in the LNG plants, which I think could give us a downturn.
Mm-hmm. Well, as you increase the reliance on, and again, this is the reason that we developed this resource, so that you could ask a question like that and say, well, what does that actually mean? Well, when you look at how much LNG represents of the demand base, you can look and see that LNG is at 15. 2 BCF is going to have a massive, massive impact. And you can actually see that on the natural gas price, because I'm going to bring up a sore point for many of the bull people, the bull thesis people out there. And let's go back in Here. Do you know one of the reasons that we went from 9 down to this 2 level? One of the reasons. It's not a singular reason, but one of the reasons.
Oh man, a place I visited many times in my high school years. Freeport.
You can say it faster than I can write it.
Well,
I'm just kidding. Yeah. Okay. So Freeport was one of the many reasons that we went down. Now, we on Energy Rogue, part of the reason that we have this service is so that we can communicate our message. During this period right here, we were advising our clients that we were overvalued. And then after we dropped this low, we have actually been saying for this period, we are undervalued. And if you want to find out where we see true value, go ahead and subscribe.
right.
Because we'll take you through that.
And
But
get the full meal deal. Go for the $179. Get the full meal deal.
oversupplied natural gas and NGLs has been an OPEC plus consideration and a target. So that is actually a key consideration. That could change the global LNG market. And if you look at UAE and some of the things that they have in the works, that is going to change the landscape of what natural gas looks like, because many of OPEC plus members are looking into natural gas because that truly is the next evolution.
Right. The LNG
That
for them.
Yes. Demand continues to falter in Europe in the broader economy. And lastly, renewables catch up on power demand, because I do want to show this on the demand side.
By the way, that European economy is a deindustrialization of both like Germany and a few others over there, where they've seen that the industry's gone overseas because they've run out of cheap energy because of the interruption of the Russian gas.
Yep. So here is our electric profile from 2020. And what you will notice is we continue to set kind of new higher highs as power demand increments up. And it is likely to increment up with AI. You can see during the winter periods, we're still stair stepping up. But what I really want to amplify is when we look at our electricity maps, this green right here, this is natural gas. Okay. And if you look at renewables, let's see, solar, I'm not going to talk about water, natural gas, nuclear, and coal. And when you see solar, you can actually see that we've actually gone down in electric generation over the last 6 months. That's interesting. And wind, you will see this sporadic. This is a large volatility, and that volatility on wind is met by natural gas and coal. So these are. Oh, go ahead.
I was going to say that the thing that concerns me most of that is that our lows, as far as demand on electricity, are going higher. In other words, when you start looking at that, we're needing more and more base load to be able to provide that electrical demand.
Right.
And if you don't understand that, the wind and solar are not base load.
Right. Yeah.
So,
well, they fluctuate based upon wind and sun.
right.
So they are going to discuss that. So let's actually wrap this up. Bear thesis we just covered. How can you stay on top of these trends? This is where Energy Rogue can help you with Rogue Radar. If you just want a weekly setup, have a PDF that is quick, easy to read, and will tell you everything that you need to know in a very condensed format. Rogue Radar is for you at $89 a month. For those that need a little bit more support, a little bit more guidance, and a little bit more research capability, Rogue Edge is only $179 a month, plus gives you access to our Discord channel where we interact with our our members every single day and answer your questions around your strategy. So that's how you can stay on top. Just go to energyrogue.com and click any of these buttons to get started. You can sign up right here. So we would love to see you inside. You don't have to join us, but if you want to be on top of the energy markets, you're either going to have to spend a lot of time or thousands of dollars or come join us. So we're here for you. And if you have any questions, reach out to us. I think that's all that we were going to cover today. Is that all?
I can tell we're going to cover, Dave, but I got one more thing to add. And folks, just to let you know who we are, how many people do you know would interrupt a live session to deal with his daughter? And that's Brian Pieri. And that's why I'm working with Brian Pieri. And so I just want you to know if that's the type of people you want to work. And by the way, Brian.
Yes, I told you I was your #1 fan.
So, folks, this should be, I hate to say this, but this should be a no-brainer.
Right.
This should be something you guys are signing up. If you have any interest at all in it, and you get out there, we're not going to lock you into a year deal. We're not going to do any of that stuff. We're here to help you become more successful. If you get out there and there's something out there that you're saying, well, it's almost there, but I just need this one more thing, let us know. If it didn't cost us $1 million to do it, we'll probably look to see if we can help you find that thing. If we don't have it and we know a place you can get it cheap, we will say, hey, go over there, subscribe to that one. You're going to get what you need.
Right.
That's who we are.
Yep.
So, hey, listen, we'll be back here next week. If you have any questions at all, Brian, where can they reach us?
They can reach us at energyrogue.com. Let me put that banner up. There we go. Yes, you can reach us. That email goes to both Bill and myself, and we will personally respond back to you. So you can reach us, or you can sign up at energyrogue.com and Rogue Radar and Rogue Edge. We do a welcome call with every single member, personalized for you. We do a welcome live with you, and we talk you through our system and what you're looking for and what might be helpful. So listen, we are excited for 2025. We have a lot of things that are working. We recently launched Rogue Edge 2.0, which is everything you see here. Plus, we have this Copilot, which is pretty interesting. This is showing a lot of interesting things, and we've had a lot of good feedback from there. So how can you stay on top of it? energyrogue.com. Come join us. If you have any questions, rogue@energyrogue.com. We'll be happy to get back to you. And I think that's all we had for today.
That's all we got, brother. So, hey, listen, sign up, don't wait, and start your year out right.
Yep. Thanks so much, folks. We will be back next Wednesday, same time, same bat time, same bat channel. So at noon
gosh, you're
Central.
showing your age, brother.
Oh, yeah. I love that. I love that. I love that line. So listen, thanks so much, folks, and we look forward to seeing you on the inside.